following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we meet at this time.
The following takes place between 2 p.m. and 3 p.m.
It does. And, of course, we're up 13 points on the S&P. Cash volume is fairly light compared to what we had on Friday. We were, I think, pushing about 2.7 when we walked in the door here to the show on Friday. 2.3 billion shares on the New York Consolidated Tape now. So light and variable volume. But, of course, really doesn't matter. Fun buying. They jack up the prices no matter what. This is when the suckers come to feed in the market, and that is that 401k money. There's always an easy way to fleece the masses, and this is one of those times. Of course, we're still, fairly decently off. This is the 2078 level, is the fairly decent resistance level that most people, most technical analysts would have said that we would have bounced to. We'll see whether or not they can keep this going, but pretty significant sign of weakness Thursday and Friday, and just to kind of push up now doesn't seem to have a lot of juice, but of course it is a fun buying, and they mark up the prices no matter what, as always. And I guess it's time to get this party started.
Then it's all just a little bit of history repeating.
On this day, not much happened in the markets, but in 1933, accounts of an aquatic beast living in Scotland's Loch Ness date back almost 1,500 years, but the modern legend is begun today when on May 2nd, 1933, the newspaper Inverness Courier related an account of a local people who claimed to see an enormous animal rolling and plunging on the surface. The story of a monster, of course, hyped by the local newspaper, became a media phenomena, and the London newspapers sent correspondents to Scotland and a circus offering a 20,000 pound sterling reward for the capture of the beast. And of course, after all these years, they found nothing. And as always, spectacular claims need spectacular, of course, spectacular, very spectacular proof. And of course, we don't have that yet. But people will dream and make up phony pictures and continue it. But I've been to a lot of places in the world and pretty jaded, but not one place I decided to go. Of course, last week we had some significant weakness, but probably more important was that after at least a weak IPO week, the week before, they did get the product out the door. We had 3 dividend-producing companies only raised 639 million shares last week. All 3 IPOs ended their first weeks down or at best flat, bringing the numbers to the first day flops of 12 to 16 already this year. And does not look like the market's any stronger if you're looking at IPOs. Red Rock Resorts, priced at the midpoint, fell 4% on its debut. This is the first non-biotech to finish below the issue price. Yintech Investment, China's largest online broker for spot trading commodities, priced at the midpoint. Broke issue, finished the week up just 3%. And, of course, they tried to go and push themselves out on the Chinese market, and they wouldn't even have them. The last one was Global Water Resources, priced at a minuscule $7 million at the high end, closed Friday up 2%. The Arizona-based company offers monthly dividends of about 3.5%, and its IPO made it eligible for refinance of $107 million in debt. Volume was just 22% of the already small float. It's the first utility IPO since July 2014. But again, weak, or as we like to say, it was a wimpy week for IPOs as we start the new week. Facebook is facing a lawsuit. I don't know if it'll go very far. During earnings, probably the most interesting thing to me was this whole issue where Zuckerberg was pushing yet another class of stock. He has, for a CEO of a company, he has probably the strongest position of any U.S. company when it comes to being pushed out. And it looks like he doesn't even think this is a good enough position, the strongest in the entire industry. He's looking to make it an issue where there would not be any case whatsoever where he could be forced out, which always reminds me of, what was his name down there in Louisiana? He was I want to say Kingfish was the guy's name, but he was a politician down in Louisiana. And he said, there's no way I'm ever going to lose an election down here. They'd have to find me in bed with a dead hooker or a live boy to run me out of office. And I think that's kind of what Mark Zuckerberg is setting up. He doesn't want any, Huey Long, thank you, in there. But it was pretty amazing that he's going to such lengths to make sure that he is the CEO for life, a tenured affair, which I don't even know is legal. I know you can pull a lot of stunts, but theoretically anybody can be removed in a public company given enough misdealings. The question would be whether or not they're actually going to pull out all the language that would say that, if he did something really horrible, like, I don't know, killed his wife or something, whether they could still move him out if he was in prison. But it certainly looks like for some reason he's got the idea that only if he has the ability to make sure that no one could even ever challenge him does he want to hang around. And I don't know exactly. Still, there's sometimes little things that just bug me, and a year and a half later or 2 years later, they come back to me. But we'll talk about that more as we continue the show. One of those things that comes back to me is Charlie Munger, barely alive. I always think about him and the guy from CNN. He's about 150 years old. Larry King, that's what it was. Larry King. But what can you say? Anyway, Charlie Munger, of course, part of the whole Oracle of Omaha gang posse, was out saying something, and it brought me back to 2005 when he said something that was almost the same. When we come back, I'm going to talk about that.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back, and it's kind of interesting anyway. Valiant Pharmaceuticals, of course, a lot of discussion about that today in the Oracle of Omaha, talking and blabbing. But about 2005, Charlie Munger said almost the exact same thing about something. He said that options were a sewer. I guess he likes that word. Of course, Valiant Pharmaceuticals, of course, problematic at best, and they were out defending it today on all kinds of issues. But the whole comment from Charlie Munger was very interesting. Again, his quote was, Valiant was a sewer, and those who created it deserved the opium they got. And I thought, what kind of guy uses a word like opium? I had to look it up. And not only that, I had to go to the audio version of the internet dictionary to find out how it's pronounced.
Opprobrium. Opprobrium. Opprobrium.
It's opprobrium. Anyway, very interesting. But, of course, it threw me back to 2005 and 6, where Charlie Munger and, of course, the Oracle of Omaha decided that all options were sewers, they were atomic bombs, they were nuclear waste. I think the best one, he said, was they were like a dirty bomb. They could go off and leave radioactivity for all time. And, of course, a scant few years later, 2012, we fast forward. Guess what? Charlie Munger and, of course, the Oracle of Omaha gets involved in options and now has 4 buildings in downtown Omaha. They are the single biggest purveyor and seller of and buyer of options and derivatives that they called a sewer. So I always wonder when someone says that, is that like a little tell, kind of like on the poker tables, that maybe something else is going on here that we should be paying attention to? because the last time he said that, he doubled up, went the opposite way. And of course, I don't know if you can say anything other than that, but they tend to say one thing there at the Oral of Omaha and do another. But not new in Wall Street. Everybody talks their book to some extent, but we will continue on. A lot of stocks moving out here today. In fact, let's get to some of those, and we will move on with the show. And we will change my normal digression at the beginning of the show to actual stocks that are moving. Of the big movers out here today, Baidu off about 15%. Now, this is another one where if you do trading long enough, I think you start developing a idea that maybe there's something else going on when someone says something. I saw a little blurb over the weekend about Baidu having a big issue with maybe some click-through fraud. We had that all over the 2000 era. Not exactly sure how it would affect Baidu. And of course, you can't tell anything about what's happening in China by the news there, because if you actually repeated it, you would either disappear or be sent home if you actually presented any kind of real journalism. So kind of a dark black hole of information over there. Anyway, I saw that yesterday, and then some kind of specious news today about someone killing themselves because they took some kind of wrong drug. Like you buy drugs in China, you know that 99% of them are frauds, right? You know that there's probably industrial and nuclear waste in those pills. Anything that anybody could get for free and put back in it. One of the things in the United States that's nice is generally when you get your drugs, and I'm not talking about all you potheads out there that are getting stuff on the street. I'm talking about prescription drugs. You know, you've got to think that, well, what's the chance of these cancer drugs that are $5 but sell for $500 a pill in the United States are real? And I don't know. Anyway, this guy killed himself for some unknown reason. And if I wouldn't have seen this article about the click-through fraud that disappeared almost instantly, I would have said, okay, so it's some kind of news. But to me, when I see that and then I see some kind of dubious news that sounds like it was made up, like this guy that killed himself, I always wonder if they just didn't substitute one other bad story. And if anybody goes back and looks at it in a couple of days, it will not matter. I knew everybody. Yeah, the ones that'll kill you. Well, apparently all of them will kill you in China. But it is interesting to see this. But it looks like, at least from the articles I read yesterday and last night, there is some kind of issue going back into whether or not these guys are telling the truth about how many clicks they get and whether they're paying other people off. This would be the same chapter that we saw, of course, in 2000 with click-through fraud that continues literally today. So we'll look at that. We'll take a quick look at Facebook. I was kind of concerned about this one, thinking that it wasn't able to hold its high from February 2nd. It had all the volume, of course, when earnings came out, only need 59 million shares. On Friday, had 37 million shares, closed back under that high. Kind of toying with it today, 118, so it's over at 20 million shares. Kind of tough to see it. Maybe it was just you can blame it on a bad day. But it continues to be an issue out here. And we're at 14 points on the S&P cash, 2.45 billion shares. So volume picked up a little bit, but we haven't moved a great deal. Yeah, I just keep thinking about that article and why he needs the kind of complete authority where he could not be thrown out in any case of doing anything. And I'm looking at this chart and I'm wondering if he doesn't, and maybe other people in Silicon Valley saw a few articles or postings in the Den today about maybe a bubble or the discussion of a bubble in technology and Silicon Valley. Wondering if he doesn't think that he's going to need that to make it through maybe the same kind of valley that Amazon did, and he wants to make sure that no one can get rid of him. But just a thought out there. I mean, he's kind of bulletproof already, and I think he wants to be almost tank-proof, and it kind of interesting. Anyway, when we go to the stocks that are moving today, what did we have out here? Let's go to these. Why are these? There we go. We looked at Baidu. Let's see. Is this really the movers? Oh, okay. That's why. I need to go back here and do it on a percentage basis so I can take a look at it. Sterling Construction Company. Don't know much about these companies. Going to take a look at them. And not a lot of volume in this one, and it's down a bit. Cisco, the food company, not the router company, looking pretty good out here. One thing they don't have yet, though, is volume. We'll talk about more about this one.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, Cisco, we left. It is broken out, at least, if it had any volume today, would certainly make me think this was some kind of sign of strength, finally breaking out through the previous level. February 19th kind of set a high, kind of went through that, waiting for earnings. Earnings were good. Volume kind of interesting, though, 5.3 million shares, which is about what that February 19th level came out with. So maybe it's going to have more volume, but certainly not a stampede. You know, if it ends up with about 7.5 million shares, it probably would be pretty good. I just thought maybe that, especially with this movement breaking out on the top, we would see a little bit more. Other stocks of significant movement. We continue to see Seagate, Western Digital have additional problems. We talked about this last week. These companies headed probably, unless something happens, I don't see how these things, 3-5 years down the line are still in business, the spinning hard drive companies. It certainly looks like memory and memory technology is, as long as you can continue to double every 12, 18 months with the Moore's Law, you continue to have a market out here that has, I think the ability to wipe out spinning hard drives. We talked about this one for a long time. We were short Western Digital and the Tech Insider back when it was 110. We got all the gravy off the top. Now that everybody's shorted, of course, much tougher to be short one of these stocks, especially if you're talking about long term. So we took all the easy money off the top. Now it's a lot harder because, of course, everybody and their dog's short. You can see a $5 or $7 move in something like Seagate in a day now, but still a problematic. And, of course, we've got a handful of stocks that are still in the night of the living dead. CLF wanted to take a look at this and follow up from last week. You had a sign of strength. You had volume. You had a breakout of the previous pretty much the last couple of two highs. Let's take a closer look at this one here when we get back to it. Hang on just a second. There we are. Oh, no, they're not. Hopefully it'll come up. There we are. Volume today about 8 million shares. That compares to 20.7 million shares on Friday. You had 47.5 million shares on the 28th, and that it's not bad. You certainly can make a claim that both the 375 high that had 25 million shares really didn't get broken with a sign of strength. You can make a claim that 47 million is about the right number to break through those previous highs. The downside is you would have liked to seen some kind of continuation. I always like that rule that the IBD people said that you wanted to see some kind of continuation. I like 3 days. I think they said something like 4 to 7 days or something, but you can't give these things forever to have a continuation day. And I think probably by tomorrow in Cliffs, you would want to see that. What else did we have out here in my list of stuff? Baidu, what else is out here? Seagate Technology, Seadrill off about 5%. Let's take a quick look at that one. What else? Yeah, not a lot of continuation on this one, although it's down. It's just down on a percentage basis. You came into these gaps at $4.50. There's another one at $6. You had exactly what you were looking for. I think we actually talked about this one not being a bad-looking chart about 3 weeks ago, and that was this March 4th sign of strength. It had everything you wanted. Came back and pretty much filled this thing back to about 270 on the April 7th low, and it's come back up to a high of 521 on Friday. A little pullback today on the light volume. Some of these things may be making some nice moves. It may be nice to see this thing come back down to that 270 on a lighter volume if you get a chance once again. Let's look at some of the tests that I had. Some of these stocks I wanted to see how they are doing. Let's see, Expedia. I want to check in on this one after earnings too. This one went into its high, had all the volume in the world, could not break its previous high, though. That is the March 14th high, 118.64, 4 million shares. Into it with 8 million shares. It is and twice the volume, did not hold the high. Got a little bit of a hammer out here today. So I'm going to be watching Expedia very closely tomorrow. FAZ, this has been up, down. Well, I guess this is the opposite, right? It's been down close to the previous low. When we look at this, what are we? $38, 1.1 million shares. You went through it with 1.7 million shares. You've gotten a little bit of a bounce, pull back so far today on lighter volume. I'm wondering if you got just this little gap out here that occurred on the 28th, kind of pulling back into that today with a lighter volume. This would look very, if this market's rolling over, this may be one of the better long-term patterns in these financials, but I haven't gotten anything that would have me feeling froggy and wanting to jump so far. Cheniere Energy, I think it's got earnings in the next couple of days. Take a quick look at that one. Yes, and I think it's the 29th. Oh, already out, right? No? April 29th. Doesn't look like any day that actually came out with earnings. Let's check on that a little later. Been watching this one, though, going into its previous high, March 7th, $38.84, 5.2 million shares. Got into it with 2.2 million shares on Friday. Light volume again today, 1.6 million shares. So we're going to keep an eye on that one. We'll check back in on the market. 2078, 2.54 million shares. So it's okay. Just looking at that, man, you got a tear of energy in this thing off that February 8th low to the March 7th high. You had your retrace all the way back to March 29th. Energy was fairly low on it. What you don't have in this move here, and of course, especially the last 4 or 5 days, is any kind of energy at all. Man, I was thinking that, see if headlines out here. Maybe I was thinking that this was on it. It says when we should start paying attention. Don't know. Can't find anything at the moment. We will move on. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Anyway, I didn't find anything more on Cheniere, so we'll look at a few other ones. Got a lot of earnings coming out this week, and a lot of these stocks just hanging out at these highs. Post Holdings, I think it's this week, Wednesday or Thursday. A lot of these companies, let's go ahead and make sure in the profile of what we've got. Markets and sells branded private label ready-to-eat cereal products, primarily in the United States. I think Kellogg's is also this week, so we'll see how these things are going. But, of course, anytime a market gets a little nervous, they go for things that people will buy no matter what, like Clorox and cereal. Everybody's got to eat. Everybody's got to have clean clothes, so they look for what they think are the safe stocks. This one's been kind of going up into a market. Not a lot of volume compared to the September 17th high, so we continue to look at that. Certainly the energy, when you look at the energy off the November 30th high down to the January 20th low, compared to the February 3rd low up to this May 2nd high, doesn't have a great deal of juice, very light. But we still have people trying to get into safety stocks, which I find fairly interesting. And the thought is, of course, these stocks will hold up better. Not that they will not go down in a market that trends lower, just that they will hold up better. And I never understood that. You can always put your money in your pocket, which I always thought was a better bet. Of course, we still have stocks that are on the move, and I wanted to see how some of these are out there, and that is Southern Copper today, getting and sitting and piercing its 9-day out here on a lighter volume today. I still, at least, I saw the action in gold when it was up about a little over 1% this morning and pulled back, I don't know, to 0.3%. And you keep on thinking that eventually some of these things are going to top out. And I keep on looking for a close below the 9-day and then back up above, especially in these commodities. I don't see any confirmation yet, but we are getting closer with stocks like Southern Copper. But you need something in the order of breaking that to the lower side, closing back above, and then back below to put that double repo pattern together. And, of course, Silver Trust, these things are way above it. So I continue to think that if you have a pullback, maybe you've got a little, for people that think this is going to be over instantly, maybe it will be. Maybe it'll just open up hugely down after these big runs higher. I still think that we're probably going to get a little pullback, one more push to the top. And if you have that push with a light volume, that it's much more likely that the way that a lot of these are going to top out. These, of course, way above them still. And as Mr. Keene said, there is you've got to put stops in. I guess he said it a little differently, but that is my paraphrasing of it. Markets can remain irrational longer than you can remain solvent, is actually what he said. And that means that you've got to put stops on because you will be wrong occasionally, and Mr. Market will give you a little paddling if you are not. Taiwan Semiconductor, we talked about these and a handful of these stocks. We talked about this coming down, at least filling this gap. It did it on Friday. That gap happened on the 1st of March with about 10 million shares, came down with 14 million shares on Friday. They continue to spend a lot of money trying to keep up with Intel. At the same time, Apple cutting back some of the chips, and of course, they are the single biggest chip user in the world. So when they cut back, whether or not it's Apple's chips being made by Taiwan themselves, whether it is some of the other vendors that are actually building chips for sub-vendors that then go into the Apple iPhone. None of that, starting with Apple, was any good, and we see semiconductors kind of in a funk. One thing we do not have so far today, though, is significant volume. And that's it. Twitter, wanted to come back and look at this one. I had a lot of questions on whether or not Twitter was one of these stocks. Oop. Whether we have, come on, Mr. Twitter. There we go. Whether or not we have a low out here that is buyable. We have not tested the previous low. That's the February 11th low, and that's at $13.91. My guess, though, I had several emails here during the break. You can email me, by the way, at path@tfnn.com, was that you will at least pierce that $13.91 low. And my guess is any weakness in the market's going to take this down to $10. You just don't get a even break when you're stuck in a stock like this, like so many are on Wall Street. Not the small guys, you can sell at any time, but a lot of these people are truly stuck in it. Does not really look all that bad. I like the last leg down, other than the one huge volume day. Of course, that's like saying, how did you like the play? Other than that, Mrs. Lincoln, this big volume gap day down on earnings has brought this thing down, but at least you've got some lighter volume out here. I would say, though, the chance of this thing probably getting hammered down to $10 still is fairly likely. And I would much rather miss an opportunity on this and buy it at $10 than hope to buy this thing as it tests that $13.91 today. And again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can put messages in the den, as many people do. See if I got just about everything out. We're 2078, gone nowhere, up 13 points in the S&P cash, 2.6 billion shares as we go through here. We look at everything we should have. Sylvie, Taiwan Semiconductor, Twitter, XME. We'll take a look at this because I know people have emailed me about this one too. And again, when you look at this, you're still fairly, come on. I don't know what's going on out here. There we go. Yeah. I got some screen flashing going on, and I'm not exactly sure why. Anyway, we are above the 9-day moving average. The XME, again, on the top of this 9-day moving average, and of course it has been since we go back to the highs back here at 1397 when you go back into February. And even then it just touched it. You can really go back, of course, into basically the late January. This thing has been above it. Pretty much, I think it closed one day below it. Again, probably looking for some kind of pullback here, a small one. a pushback higher that fails before you find some kind of top in it. So I'm not ready to pull the plug on that market just yet. Of course, it could fail at any time, but I have a sinking sensation that the first little pullback here will be bought yet again. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to look at Apple here. It's off 35 cents still. Did go to a tiny bit lower today, but you've broken through many of these previous lows. If you wanted to key off the January 20th low, that was 72 million shares. And, you had a kind of a quick test on January 28th with 55. It moved back up. Previous earnings, of course, started to sell off before earnings, blew up on earnings. 35 million shares today, let's call them 69 million shares. That's still, just 3 million shares light. To me, that's not enough. The question is whether or not you've got any real juice in this thing to hold it up. It's just kind of the stock that I have a feeling a lot of people are going to think that it's a great deal. So you're probably going to get some kind of bounce into this. I don't know where that's going to happen. The volume's too much on Friday to make me think that there's any significant move coming right now. Maybe a couple of days of light volume could change that, and you could get back in and maybe fill half of the gap down. That would take you to about $100. And maybe that would set up some kind of ABC to the downside. They've got $230 billion, though, and my guess is that we'll see yet another round of buying their own shares back, since I guess they can't do anything else with the money, which is always problematic, at least when I look at it. Of course, we're still in this huge uptrend that just seems to not have really broken on all stocks. In fact, some are still going higher. We continue to see a lot of stocks that just have trended for a long time over their 9-day, like Baxter. No weakness in that today. Bristol-Myers Squibb still above its move. When we look at this, no real, even, you kind of pierced it last week, came right back into it. There's no real signs of these turning. And Coeur Mining, CDE, solidly above it, off a little bit today. No big deal. Certainly no signal yet. And that is the biggest thing that I'm trying to convey out here, is a lot of these stocks that have done nothing but kind of stumble up. Not huge can't even say it, huge profits every day, just a little bit higher, have been trending higher. Kindred Healthcare, I think they have earnings this week. When we look at those, PCH, which is Potlatch, this thing has been rocking higher, gapped higher, of course, last week on the 26th. But none of these stocks out here, I think we got the first kind of taste of what's going on and the first pullback. I think we're kind of getting a little bit of the upside to the right-hand side on many stocks, and kind of looking, I think, at the end of this fund buying to start seeing the selling come back in. As I said last Wednesday, I think that we've kind of cracked the top, and I'm looking for a pullback to that 1920 level on the S&P cash. It probably not going to happen immediately. I think we're going to stumble back down there. One thing I kind of find the most interesting is looking at the dollar. We're up 14 points today on 2.7 billion shares as we close the show, but that's with the dollar off another 0.5% down to 92.57 on the dollar index, and it's still not enough to juice this market. The question is the Fed and now the Treasury out of bullets? Viewers want to know. I think they are, but we may have more days where they wave the gun around. We'll see you tomorrow. Same bat channel, same bat time tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.